Yes, good afternoon, all. Can you hear me?
Yes, we can. It's all
Okay.
yours.
Thank you. Good afternoon and sincere thanks for having the ECCB at this very important conference. We appreciate the ability to share our Dcash with the rest of the world. Will I be operating the slide from my end because I have a presentation? I'm not sure what is the modus operandi. I see it's on the screen.
Yes, we can hear.
Okay, so you'll do it from you. Okay.
Yeah, and you can just
So,
confirm if there are slides or
okay,
what
so go to slide 2 then. Yes.
slide 2.
Yes. So thank you again as we talk about Dcash. This we know is our digital EC, and that's really to ensure that we provide a faster, cheaper, safer means of effecting payments and transfers in the Eastern Caribbean Currency Union. And I want to anchor this in the strategic priorities of the Eastern Caribbean Central Bank for the region, which is the ECCU payment system modernization. We know that this payment system is a critical component of our region's monetary and financial system, and it plays a very important role in the economic development of the region. And that is why the Eastern Caribbean Central Bank is driving this payment system modernization. And our digital ECCash, Dcash, is a component of the strategic priorities in relation to the modernization of the payment system architecture. And this is done in order to reinvigorate ECCU economic development and growth and ensure continued stability. We know that the payment system and the whole idea of digital transformation is essential to improving competitiveness through interventions. And part of these interventions really are to look at technological innovations in the payment system. What we are providing is a secure, affordable, and accessible payment system that drives ECCU digital economy, reduces costs, enhances financial inclusion, and makes the monetary and payment system more efficient and secure for the region's economic development. Slide 3, please. Now, there are several gaps in the architecture of the current payment system, and you and I know them very clearly, but I'll just articulate a few. The first thing to do is cost and efficiency in the antiquity of the current architecture, which really retards the development and possibilities of the region in a digital ecosystem. And even if it's not digital, it is still these frictions that prevent persons from really having access to an affordable payment system to drive their payment goals. We know many businesses will say, I really want to go electronic and accept card payments, but I have small margins. And the cost to pay, whether it is 3%, 3.5% or more, as well as the additional costs, are really cost prohibitive to merchants. But it's not just merchants is the issue. It's we know the issues in relation to small payments. Many times you go into a store and they will say, you need to have a payment of $25 or more. And all of these other frictions that continue to keep us back and not allow us to move forward. So when you think about the next slide, one can see that the digital economy is worth trillions. And if we can leapfrog into the digital era with a very strong digital EC, which is what we have, but now going digital, then that provides that catalyst to really drive the digital transformation. It is estimated that 70% of all new value in the next decade will be on the digital enabled platforms. Not when I say next, in this decade, will be on digital enabled platforms. And so it's important for us to understand that we have to move in tandem with where we want to see our trajectory of growth and economic development. And this brings it home in the next slide, which looks at key global payment system trends. We recognize that while according to Facebook's DM's white paper, cash-based transactions still globally still account for about 85%, which really mirrors the region. We're around over 80% in cash-based transactions. But what studies show is that over the next 4 to 5 years, this digital ecosystem will make it such that about 50% or more of all payment transactions will be done via digital wallets. And that brings into the fore the issue of digital currencies. And when you're thinking about safety and stability, that raises the bar to discuss a digital fiat currency, as we have with Dcash. And so think about $9 trillion annually in digital payments, looking at blockchain technology, peer-to-peer architecture, digital wallets, and the like. It's critically important that the region opens itself, and not just the OECs, but the Caribbean, opens itself to the issue of digitalization of its economy, not in a small sense of a few ICT. That's really leveraging digital platforms, but not really digitizing the economy. When we talk about digitizing the economy, we are talking about creating digital industries and really moving the economy forward. And if money makes the mayor go, then one needs money to be able to effect that catalyzing process of digitalizing the economy. Now, I want to show you the benefits on the next slide that looks at some of the benefits of having a digital EC currency and having a digital fiat currency in general. Now, we know within our region, we are open economies and we depend on trade with the rest of the world as well as trade with each other. At the micro level, what our Dcash, our digital EC allows for then is that peer-to-peer transactions to not only drive businesses, but drive within country, but drive business activity and money transfers in country and across our 8 member territory. And so it's very important when we think about this, we look at both the micro and the macro implications. At the micro level, we're talking about giving persons inclusion. We're talking about making sure that peer-to-peer architecture allows for ease and cost efficiencies. We're talking about the issue of moving the financial architecture to a new level to get to the transformation that we know we need in order to be able to be resilient and to be secure in our own economic space. And this will be achieved when we make sure that we have that digital path in order to engage in a competitive way with the rest of the world. We also look at stability and the issue of leveraging blockchain and the issue of transparency and making sure that the region continues to adhere to regulatory standards. And that immutability of the blockchain technology, where the data is not able to be erased, that it stands to the test of times and able to be audited, gives that whole auditability, transparency, and other qualities and characteristics that are required to have a safe and secure payment system architecture. When we think about these benefits, as shown in the next slide, it is not just governments or regulators who benefit, it's the individual consumer that now gets access, that now is able to do things in an electronic and digital sphere that they weren't able to. They won't have to carry around a lot of cash, which exposes them to harm, attacks and theft. They won't have to be open to the issue of loss of funds if they forget their wallet, because the whole security architecture makes sure that while your smart device is used as the interface to do the transaction, no funds are stored on the device. It's an account-based model as opposed to a token-based model. And this leverages that security, because from a fiat currency, one would not want that the money supply is hindered by that amount of leakage due to losses and the lack of recoverability. So one has secure, one has the safety, and one has the cost efficiencies and the ease of moving money from one space to another to effect one goals. And these same things obtain on the merchant side, be the merchant a government or be the merchant enterprise, a private sector enterprise, in that they're able to have business to business payments, business to government payments. One can understand in that digital architecture, you're reducing the cost of the paperwork, of the face-to-face, and bringing down one's cost means that one then has more funds to expand, to invest and reinvest, and to shape the business in a way that could not be shaped if one had to obtain a costly payment system architecture or one that depends on cash. In the next slide, I want us to recognize that from the central bank perspective, we have not supplanted ourselves within the intermediary function. That still obtains that two-tier where the central bank mints the currency, passes it on to financial services providers, and they are the user-facing entity to drive that engagement, that customer relationship management with the customer. And so that creates that continuity without, however, limiting the entry of new service providers. And the more competitive a financial system is the more robust, but also it benefits the users because now you have differentiated of services, you have new service platforms and new service and new products that can be built on top of those platforms. I want to just give you a little insight about how easy it is to use the DCAS. So for the next slide, please, I would want to just show you that we have made sure that the design looks at more than one pathway to be part of this DCAS ecosystem. We recognize there's some persons who don't have access to a bank or don't have a bank account, whether it's by choice or it's by design because of the cost frictions. You know, when one talks about the issue of access, it's not just the ability to have access, but the ability to afford the access and what does access bring. So when we talk about financial inclusion, our definition contemplates not only access, but the quantity and quality of access and the cost of access. And so for this, if you don't have a bank account or you don't want to affiliate with a commercial bank or a credit union, one can sign up with ID, and all they have to produce is one piece of ID to get access to a value-based wallet. And with this, then one has to physically link the exchange, the Dcash for the physical ECCash for Dcash. If one has a relationship with a commercial bank or credit union, one can maintain that relationship. All they have to do is sign up with a code. And with that code, they then activate their Dcash wallet and then are able to engage their financial institution on how to move funds from their deposit accounts to be able to convert into Dcash without them having to go physically into the bank. And it's shown up on the next slide where it shows the 3 easy steps. 1, 2, 3. The first one is to download the application, the app, just like one has a Facebook app or other apps. They can just download the app from whether it's the Apple Store or the Android Store. And then they can then activate that app either by getting a code from their financial institution, or they can register with ID by just engaging remotely. And all of this thing is remote. They can remote one of the authorized agencies that can allow for them to be onboarded to the system. And once they have done that, and they have made the exchange between their physical cash and Dcash, or from their savings or deposit accounts to Dcash, they can then engage merchants in order to scan a QR code, and as it is scanned, they confirm, and once they confirm the payment, then the payment is settled. And part of the idea, if you see the architecture, it's a payee driven. So the payee has to push. And not only do they push the payment to the recipient, they have to confirm. And this brings in a heightened sense of security architecture, because no one can confirm for you unless they have access and unless they know what your password is and they have access to your device. And so that brings an extra security. In the next slide, I want to look at some of the design principles that we as a central bank have adhered to in making sure that the Dcash meets our financial and stability architecture. And the first thing is that we want persons to know that this is easy to move one form of cash to another form. So it's the same EC. is not any cryptocurrency. It is not a stable coin. This is EC currency, just in digital form. And so what that allows is seamless movement between the forms of fiat currency. The objective of the Dcash is not a savings instrument, so there is no interest bearing as one would have with these bank deposits. It is just for transaction purposes, and that allows the Dcash to be introduced without disintermediating the financial system, where banks accept deposits and then use those deposits to lend to other customers. So that deposit funding still goes on. This is akin to one just going to the ATM and taking off cash. Instead of having to physically go to the ATM, one can digitally or electronically do that and just spend what they need to spend within their budgetary means of what they spend. It is not a savings instrument, and it's not an investment instrument. So it's not a storage of value for any large transactions that will compete as well with government securities. The purpose is solely transactional. And it also honors safeguards that we have embedded in the design as core principles, limits and ceilings on how much Dcash one can transact in based on one's profile. You know, when you go to the bank, you have your know your customer, and you have your anti-money laundering, and you have your counter financing terrorism. All of these are part and parcel of the Dcash ecosystem design principles. And then there is the ECCB, who is in charge of the monetary system. And so the ECCB determines, based on its policies and what it wants to achieve in monetary and financial stability, the quantum of digital cash and the quantum of physical cash that it will be able to manage based on where it wants the development architecture to go while preserving the financial system. So there is no plan to get rid of EC cash. There is no plan to get rid of EC physical cash. What is being designed and desired is to reduce the amount of physical cash in consistent with an optimal level that will allow for an ease of doing business, payment system efficiencies, the digitalization of our architecture. But cash will always be a key component of the payment system. By providing options, what you have is a more robust system. So when persons say to me, what happens if electricity or internet goes, because it's internet-based, cash will always be there. And so for the period, this is the architecture. But the good thing about the architecture, it is designed in a modular form. And so by modular, it means you add to that architecture as the needs and goals expand. So we started off with a point of sale system, and now we're moving into now an e-commerce component of this. And we'll continue to add components to this as demands and as needs, and as we maneuver within the monetary and financial system architecture with competitiveness, inclusion, and stability as our watchwords. I want us to look in my last two slides, the next slide, at what is happening globally, because we are not alone. 83 central banks, which represent the over 90% of central banks in the region, in the world, in the global economies, are doing some aspect of whether it's a central bank digital currency pilot, whether it's research or other aspects that will allow them to understand what benefits they can derive from a digital fiat currency. And so the Caribbean is leading the way. We have Bahamas, we have ECCB, we have Jamaica, and others that are leading the way in charting. And that shows the whole idea that, as the Jamaicans would say, we small but we talawa, in that we can punch above our weight. And that is what it is, that thinking that will drive the Caribbean economies and keep us competitive and resilient. That we're not limited by the size of our land space, only by our vision. And the last slide, therefore, I want to conclude by saying that change brings opportunities. In the next slide, change brings opportunities. And one has to look at this in where we are going in terms of the future, and to really look at the future and guide our future, because the future is now. What we do now impacts the future. So the future is not something distant. It is really now. But to make sure we guide that future in a way that benefits us and that we have control over, it demands vision, it demands change. And change means giving up some things that we were comfortable with, but it also demands innovation. It needs new ideas, new thinking, new ways of seeing the same glass, but with a different purpose. But it also needs collaboration and partnerships. And that is important, because unless we collaborate and partner, we will go fast alone, but we will go far together. I thank you.